the world is changing at a really rather rapid rate. So we've seen these profound disruptions to the business. We're seeing many more volatile geo and social political issues arising that affect the business. And one of those manifests, I think, very clearly in the rate at which we are able to achieve permits and maintain permits for our operations. If you add to that the impacts to supply chains, etc., from the significant market dislocations that are created by conflicts that are happening more dominantly over the world. These are sort of pushing economies now, if they're not already there, into recession, and there are material impacts arising from that, on top of what we see and have seen over the last few years as a rising and legitimate, I believe, societal set of expectations for companies like mining companies. So inflation is in our costs now, and more importantly, it is also coming to bear in the cost of capital. And the impact of all of this has been exacerbated by real evidence that climate change is here and with us today. So you saw the disruptions to the business at the beginning of the year from extreme weather events. These extreme weather events are just becoming more and more extreme, and they're becoming more and more frequent. And we have to think about that as we plan the business going forward. I believe we have responded to these challenges, be that the lack of people, be that the turnover of skills availability in various jurisdictions across the world, the impact of these supply chain dislocations, and we've really started to dig into the implications of this high inflationary environment that is facing us. So half one was a pretty gritty half for us, and we reported that out to you a little while ago, and we have been able to make some solid returns to stable performance through the second half. So second half, much better outcome than the first half. And I'm pretty confident that the focus that we've had in the business during 2022 on prioritizing our operational activities, getting back to basics, the basics of mining, with some, in many areas, what are a completely new workforce for the business, is really important to setting us up on a good footing for getting through to 2023 and executing the balance of our business plan. Now, don't get me wrong, right? I mean, I think we still actually have quite a lot of work to do in terms of getting the operating model to a level where we are comfortable as a business that it is going to continue to present sustainable and safe performance. But notwithstanding, the recovery in the second half to the first half, I think we have to stand back and think about whether there are any fundamental systemic issues in the short to medium term as we go through our planning process. And I've bucketed these implications of what I've just been talking about into three core areas. The first one of these is ore qualities. So we are seeing very difficult grades, much lower grades, recoveries and challenges with very hard ore in our operations in Chile, at our PGM operations in South Africa, in our South American businesses of nickel and at Minas-Rio. And of course, these are in the numbers, as you've seen during the course of this year, and continue to be in the numbers in the outlook for the next 3 or 4 years too. Of course, we saw this, we call this mining inflation, and we saw this coming at us at some particular point in time. We had an expectation that through our technology programs and through our market management programs that we would offset the rate at which some of this mining inflation was impacting the business. But realistically, given the fact that we were operating for a couple of years with very limited people in the workface, that our technical teams weren't able to deploy to these operations, we just haven't been able to get out ahead of them at the pace which we were expecting to get ahead of them in the previous guidance. Now, that doesn't mean that there isn't still an opportunity here for us. I think that there is. We have some of the technical ideas. We have some of the technical developments that will deal with these sorts of ore characteristics. We're just delayed in deploying those. So still very good work that the team's doing there. The second bucket of issues that are impacting the business on a go-forward basis that we need to be cognizant of and manage effectively for are these areas of what I call logistical and operational parameters. And this affects primarily Kumba in South Africa and the steelmaking coal business in Australia. So in terms of these operational parameters for the steelmaking coal business in Australia, first, Here we are in the process of restarting our 3 longwall operations after a 2-year hiatus, where they were predominantly down for various reasons. But they're starting up under a new set of regulatory and safety procedures. So this means that the way we think about operating these from both a strata and a gas control position has to slow down the rate of building these operations back to full production. Okay, so we're on a learning curve here. So it's like a project that's deploying new technology under much tighter regulatory conditions. Given the scrutiny that we have from the safety regulators, we have to really be cautious as we step our way back to full production. At Kumba, our primary constraint for running that business from a production point of view is Transnet. So getting the ore from the mine to the port. As you all know, Transnet has been having a few challenges themselves over the last year or so. We are working very closely with them in an attempt to try and improve that, but we expect that these improvements are going to take some time to bed in, and we've taken that into consideration in the planning. The third bucket of issues that impact the business that we have to plan around is the nature of the ramp-ups and the expectations that we have in terms of the ramp-ups of various projects. So the 2 projects at play here are Quellaveco and Venetia, the Venetia Underground. So Quellaveco is ramping up extremely well. So let me be absolutely clear that we are on target in terms of the plans for the ramp-up of Quellaveco. But we started to ramp up a little bit later than we had planned to do for various reasons, and the consequence of that late start plays through into next year's guidance. At Venetia, we are now transitioning from the open pit at Venetia to the underground. We had a wonderful year in the open pit this year, and as you will recall, we improved our guidance by 1 million carats earlier on in this year to reflect the nature of the gems that we were getting out of the open pit in the goodbye cut, as the team call it, and the volumes that we were able to extract. But from next year, we are fully into an underground operation. Now, with these underground operations, very different from open pit operations. For quite a long while, you are operating as a project and as an operation through the logistics of the shaft system. So we're still developing underground areas. We're still moving material from a construction point of view up and down the shaft, while at the same time we have to provide the production materials up and down the shaft and getting the ore out of the mine too. So there are real ground and logistical constraints that I think we have to pragmatically factor into the guidance going forward, and that we've done. I would say that finally, the other thing that I think is systemic in the way that we think about planning the business now is how we look at weather uncertainty and building resilience into our operations. So we have always considered what the impact of weather would be, and certainly the seasonality of the weather patterns on our ability to produce, particularly from our open pit operations. But ordinarily we would use data sets that are far longer ranging and therefore providing average outcomes from precipitation points of view that are quite different from what we've seen in recent years.